using those. Alrighty, let's go back to some questions here. Can I roll over my entire $500,000 in my current 401k to a new self-directed IRA and invest $500 into a new startup? Yes, you can. As I said, it's very, very easy. Just a 5-minute conversation. You provide that information to your 401k provider, and they'll be able to move it over for you. The only thing I want to make a point about is if this is a current 401k, a 401k for a job that you're currently employed in, you may have to meet a qualifying event to do so. Qualifying events are usually reaching the age of 59 and a half or a change of job status. Some plans will have provisions that you're able to do what is known as an in-service withdrawal. It'll allow you to move, a portion of those funds over to a self-directed IRA, or some will say, you need to meet that qualifying event to go ahead and move these funds. We always tell clients, if it is a current 401k that you're working with, always contact that plan administrator, see what your options are, and see if this is available to you. Is there someone at ETC that we can contact and will introduce us to ETC clients that may want to loan funds? Unfortunately, Dan, as a passive custodian, we are not able to do that. As I said at the beginning of the presentation, we're not licensed to give any kind of investment advice. So we can't tell clients to contact different individuals that may be offering different types of investments. The one way we do allow our current clients to go ahead and network with individuals like yourself, small business owners or startups, is the networking conference, that live educational event. That is a very, very, I would say, efficient tool for investment sponsors or people that are looking to gain money, because it's the most qualified investors that you're going to come in contact with as far as IRA investors are considered. They are our current clients. This past year, we had an event down in New Orleans. We had about 600 of our current clients and soon-to-be clients at that event. These people are looking to learn more about the different investments that are out there. You're able to network yourself as one of those professionals with an investment in mind and, gain potential investors for yourself to loan money to yourself or to fund your business.
Michael, you do also have events throughout the country at various times during the year where maybe an investor that's looking for a smaller conference in the Midwest or just about anywhere would probably have the opportunity to attend something like that. And certainly there aren't going to be 600 people at that event, but there could be a couple hundred people at that event, correct?
Correct. And those are known as our tax-free wealth building seminars, and I thank you for bringing that up. Usually that is put on by the head of our equity university. It's all over the continental U.S., and the dates right now are subject to change. I know we are scheduled through the end of January right now, and we're working on getting our schedule out for the rest of the year. And I believe we're down in Florida this weekend, and then we come back and we're in Cincinnati. But I could be wrong on that. I don't have that schedule in front of me, and I apologize. But I know we are scheduled through the end of January. You can find the schedule for those events on our Equity University page under the Events tab, and that'll tell you, when they will be in your neighborhood. Next question. Compared to normal equity investments, what are the trading capital gains treatment for ordinary income treatment in a self-directed 401k? And let me just read that one over so I can better understand it compared to normal equity investments. If I'm understanding that question correctly, and I may be reading that wrong, as far as doing any kind of normal traditional investments, you are able to do that through our internal broker, any kind of outside broker, any large firm out there, or even a discount broker such as a Charles Schwab, E-Trade or Scottrade, rather. you would be able to extend an account with them. It would be in the name of your IRA here at Equity Trust Company. You would fund that account with the Equity Trust Company account, and then you'd be able to trade as normal. The difference is if you go the alternative route, you would be able to go directly out of your IRA account, such as the small business entities or large entities, any kind of hard money lending that you would be doing. And the return on that is not subject to the capital gains because it's coming directly out of the account, and you're not dealing through any kind of broker, in a sense, that would be collecting commissions or charging per trade. Next question is the fee schedule. Where can I get it? It is listed on our website, and what I can do is if you contact me, which I can go ahead and put this up while we're talking. If you contact me directly, I could send that out as well as any kind of other white papers associated with the investments in small businesses, entities, or any other investment that you may be interested in. I could provide that information to you, as well as if you wanted to take advantage of that blueprint for success to see exactly where you stand, I can take care of that as well. If you were a broker,
we will have some of this information available in at our VentureSHOT location as well.
Okay, great.
We can make that available.
Mm-hmm. Next question. If I'm a broker, can I take loans from ETC clients that I represent? If you're a broker and you're taking ETC, that's kind of a gray area because you're almost falling under that fiduciary responsibility. They are essentially you're charging them fees for your representation, and that can be looked at as a fiduciary responsibility. So that does fall into that gray area. You may want to consult that IRC 4975 for that. My company purchased freshly charged off credit card debt, a discount, and then third-party collection agency to collect on the debt. We offer the opportunity to investors to invest, partner with us. You have a showcase seminar where we can meet potential investors and tell them about our company. Yes, we covered that with the different tax-free wealth seminars as well as that networking conference. Both of those, as I stated, you can take a look at on our website under the events tab. I will say the networking conference is in September each year, the early weeks of September, and then as I said, the tax-free wealth seminars, that schedule is due to change, we haven't finalized the schedule for the entire year. Tell Dan to post opportunities via Equity Trust Facebook page. Okay. Is there ever an opportunity to have a single account executive assigned to my account? Sometimes the team approach can be frustrating. That would be me. I'm the key account executive, and I am your front point of contact, not only for Mr. Bach, but for the individual clients that he would send me or the individual clients that you would send me as well. So my job is to play the liaison between not only yourself but your clients. So anything that you would need, if you need me to contact a client to get an account set up, I'm able to do that. I contact them, set their account up. Not only are you able to contact me saying, how is John Smith's account coming? But John Smith is actually able to call me and say, I have my account set up. What is the next step to take the investment? I'm able to go ahead, provide the paperwork for that investment, and correspond with you as far as getting signatures for the entity side of things, making everything run smoothly and efficiently, getting the money out to you in a fast manner.
And that actually is something, Michael, that has been of great value to us using Equity Trust, is that we've, for a long period of time, several years, we've had Michael and then actually another person that worked with Michael, and we could literally contact them or connect a potential investor that has an IRA up with Equity Trust, and they could see to it that everything was taken care of and the account was set up. So that's been really great value. So there's a little bit of a team component, but yet you do have a point of contact, and I know firsthand that's been of great value to myself, Dave, and others that have used Equity Trust extensively.
Well, thank you very much for that. And as you see, Bob has been with us for quite some time now, and he's very valued in our company as far as a client and investment sponsor. Last question: if $500,000 investment in a self-directed IRA grows to $800,000, is $300,000 upside taxed as capital gains or ordinary income? This only makes sense to fund startups LLC if it's treated as capital gains. With this, you have your investor with $500,000 puts that into your entity. You go ahead and you invest it, and he makes the $300,000 on your entity growing to $800,000. For that, that $300,000 for the investor is not taxed at a capital gain. But if that entity, I wanted to bring up a point, if that entity is run as a flow-through entity, they may be subject to UBIT tax. UBIT tax is unrelated business income tax. That tax would be assessed at the gain that the individual client would have, so that $300,000 if it's run as that flow-through entity, and then a tax professional can actually, tell you exactly what that would be. I'm not licensed to give any kind of tax advice, so I would not be able to expound on that UBIT tax as far as what you'd be looking at as far as a percentage in that.
Hey, Michael, can you comment on whether, if that were a Roth IRA, then
Sure.
there would certainly be a different arrangement, correct?
Sure. They would still be subject to the UBIT tax, but the only difference is when they went ahead and they took their distribution, because it was a Roth IRA, say that is a post-tax type of account. So any money that you put into that account by contribution you've already paid taxes on, whatever that grows to, you go ahead and you take as full profit. You've already paid taxes on the money going in. The money coming out from your investments is solely yours. Uncle Sam doesn't get to touch a cent of it. That's the same if you're doing any kind of rollover or any kind of transfer. If the transfer is coming from a Roth account, obviously that's not a taxable event, transferring the funds over to Equity Trust, so there's no taxes up front. Whatever you use that money to and grow it to is yours to put in your pocket. If it does come from a tax-deferred type of account, a 401k, IRA, 403b, any kind of state-sponsored or pension plan, that's in a tax-deferred environment, meaning it's pre-tax money. Moving it over to that Roth account would just be ordinary income tax assessed. But in doing so, you're giving yourself a very powerful tool, because remember, in the case of that $500,000 investment, say you go ahead and you grow that to $800,000, you just made $300,000 that the government can't tax you on. So that's straight profit to your account, and you just, increased your account that much more, and not having saving